Good evening.
Yeah, thank you so much. I hope we had a good day. All right. Apologies for what happened last week. I think the system just had to do some just acted funny, right? So I'm going to quickly do like a revision of what we did last week, and if time permits, we'll start with the next topic. Okay. Otherwise, we'll continue. Okay. We stop where it's supposed to stop. Last week, or the last time we met, we were discussing substantive procedures, looking at the non-current assets. And I remember vividly that the penultimate class before that, that's the class before that last class, we look at introduction to substantive procedures, right? So now we are taking it further. We are looking at it from the angle of the non-current assets. Okay. And I also remembered that I also talked about substantive procedure being an audit procedure that combines test of detailed transaction and analytical review procedures. The combination of these two gives us what we call substantive procedures. Okay. Now, how does this relate to non-current assets? Now, for non-current assets, right, we also need to carry out substantive procedure for them because we need to establish that this non-current assets do actually exist. That's number one. Two, we want to be sure that these assets that exist, they have values. Okay, they have values placed on them. Number three, we want to be sure that this asset is either they either belong to the owner of the business or they are borrowed. Whichever one, whether it is borrowed or it is theirs, there's supposed to be a supporting documentation, okay, to back this up. And those are the things are much more that we'll be looking at when we talk about substantive procedure as it relates to non-current assets. Okay. Now, non-current assets are those things that you normally call before, those assets that you can feel, you can touch. Before now, we used to call it fixed assets. Okay. But with the adoption of IFRS, right, fixed asset is no longer allowed, right? It's archaic. You normally call it now non-current assets. All right. Now, if you are talking about non-current assets, you can only find them when you prepare or when you get hold of a statement of financial position where you have details of these non-current assets. All right. Now, it is worthy to note also that when you are reviewing the non-current assets, right, there are certain things that you should be looking out for in the non-current assets. Number one, the basis used to revalue the assets. Number two, the date the assets were revalued and whether an independent valuer was involved in the revaluation. And next one, the nature of any cost index that was used as a base for calculating replacement cost. All right. Then the carrying amount of each class of assets that would have been reported if the asset had been reported using the cost method, and if the asset had been valued at cost minus accumulated depreciation. Okay. And valuation surplus and any movement in the surplus during the financial period. All right. All of these are what we would look at, okay, when you talk about examining or reviewing the non-current asset as contained in the statement of financial position. And you agree with me that these non-current assets are susceptible to what? To manipulation. I think I've talked about that when we were talking about inherent risk. That is this non-current asset, the account balances, they are what? They are susceptible to manipulation. And I explained how they are susceptible to manipulation. One of it is when you look at IAS 36, that talks about what? Impairment, right? And we said that according to that standard, IAS 36, it says that at least once a year, the assets of the organization should be what? Should be tested against what? Impairment. So we are trying to talk about impairment, saying that the current amount, okay, has not
Yeah.
reached, or the current amount has not increased, because whether it has reduced or increased, it has an impact on the users of financial information, because you are going to make decision based on the financial information that is available to them. And because of this, they will be making some decisions that could be what? That could have a far-reaching negative effect on their investment about the what? Organization. All right? So because of the risk of material misstatement, hence the reason why we need to ensure we conduct what we call, or we perform what we call substantive procedure for these categories of asset that we call non-current assets. All right? Now, the principal risk of material misstatement that relates to non-current assets, right, are contained in the assertion. Remember our financial statement assertion that we look at in chapter 6. Now, financial assertion, I need to please go now, please mute your mic. Esther, please mute your mic, please. Thank you. All right. I was saying that, remember our financial statement assertion, where I said that financial statement assertions are statements made by the management or those charged with governance that prepared financial statements, stating that the financial statement presented to the auditor do not contain any material misstatement. That is the meaning of financial statement assertion. Okay? The preparer of the financial statement, Ugona, please, would you please mute your mic? Thank you. Thank you. So, the preparer of financial statement, they make assertions saying that the financial statement that they have presented to the auditor does not contain any material misstatement. That's what we mean by financial statement assertion. Now, it is the auditor's responsibility or duty to test whether those assertions are correct or they are incorrect. And I remember also in chapter 6, we look at the types of assertion, financial assertion. There are three. The first one is called assertion based on transactions and events. And that assertion focuses mainly on what? The statement of profit or loss and other comprehensible income. The second assertion talks about assertion based on account balances, and this focuses on what? This focuses on statement of financial position. And the last one is called assertion based on presentation and disclosure. And I said, because for both of them, you are expected to present, you're expected to present the financial statement in a form that is easily understandable by the users of the financial information. And for them to be able to understand some of the information, your financial information, you need to prepare what we call notes to the account. So because of the note will perform the role of what? Disclosure, meeting the disclosure requirement, right? So what we are saying here is that when you look at these three assertions, only two relates to the non-current asset. And which are the two? The first one is called the assertion based on account balances. And the next one, assertion based on presentation and disclosure. Because I remember I said that the assertion based on presentation and disclosure relates to both the statement of financial position and statement of profit or loss and other comprehensible income. So we are going to look at two of them here. So the two of them, if it's not properly tested, right? Because I think the auditor will test those assertions. If they're not properly tested, it increases the risk of material misstatement, right? That we call principal risk of what? Misstatement on the what? On the non-current assets. So the risk are number one, the completeness assertion. That is, there's a risk that the assets owned by the reporting entity have not been included in the financial statement. You know, when I started this class this evening, I said that there are things you need to check for in non-current assets. That either you are the owner of the asset or that asset has been borrowed or leased or hired, okay, to generate economic benefit. And I said on either of these ways, there must be documentation. So the other you want to test that, oh, are you sure you're the owner of this asset or these assets were borrowed? Then there's a risk that assets owned by the reported entity have not been included in the financial statement. Mutia, please mute your mic. The second assertion that the editor will also, which is a big risk, is one that we talked. Yes, Augusta, please ask your question. Please go ahead.
So I'm just joining the class now, and I can't really understand the topic you're treating. Is it the one that was shared this evening?
Yes.
Like,
Were you in class? Were you around last week?
last week I briefed in and briefed out, sir.
Okay. And did you check the WhatsApp platform?
They said I think
Yeah, there was a disruption. So what I'm doing now is that to complement for that disruption, I'm doing that class like all over again.
Okay, kind of revision.
Yes.
Okay, so
And we are
we've not really started
chapter 10.
the one of today.
No.
Okay, all right, sir.
We are discussing chapter 10. All right? So you can put your hand down now, or you have another question. Augusta, you can put down your hand, unless you have another question. Okay, before that call, there is also, we are looking at the principal risk of misstatement of non-current asset. And the first one, I've talked about their completeness. Second one is about what? Existence assertion. You know, I said that assets can be what? Can be, what was the word I used that day? I said assets are susceptible to what? Manipulation. That they might not exist, or they might have been sold, they might have been transferred, something might have they might have been removed from the premises, but yes, they will not remove it from the asset schedule. And if the auditor is not somebody that is very that has this attitude of professional skepticism, it might tend to go along along with the management that everything is fine. Whereas as an auditor, you need to have an attitude of what? Professional skepticism. So you have to conduct what we call asset verification to confirm the existence of those assets and the status of those assets. Because if you don't carry out this exercise, then there is a higher risk that the financial statement contains material misstatement. What if certain assets have been removed from the schedule which you were not aware of, and yet you accounted for them as though they actually still exist in the what? In the premises. So there is a risk that assets reported in financial statement do not actually exist. For example, might have been sold or scrapped. Okay? The third principal risk is when you talk about what? Valuation assertion. There is a risk that the asset have been incorrectly valued, which could be due to incorrect recording, inappropriate valuation, or incorrect depreciation calculation. So imagine you bought an asset in the middle of the year. Let's say you bought it in the middle of the month, right? And that asset was put to use on the 15th or the middle of the month. And when they were computing the depreciation for that asset, they started it from the first day of the month. So if that is the case, you agree with me that valuation, the calculation of depreciation for that particular asset is what? Is wrong, because the depreciation will be higher because you are starting from the first day of the month. supposed to have been from the 15th day of the month. So there is that risk that the asset has been incorrectly valued, okay? That is incorrect recording, inappropriate valuation, or incorrect depreciation calculation. There's also a risk of right and obligation assertion. That is, there's a risk that the reporting entity do not actually own assets that are included in the financial statement. What is that thing that substantiates you as the owner of an asset? It is what? The document. If two people are fighting for a piece of land now, and one person went to court and said that he has the CFO, certificate of ownership, and the second person does not have, that one that has certificate of ownership is the rightful owner of that land. Because there's documentary evidence backing that ownership of that land. You understand? So, rights and obligation. Remember, when in chapter 6, we look at audit evidence and sampling. I said one of those assertions, okay, that is contained under the assertion based on account balances is what? Right and obligation assertion. The auditor will test. Right is to the asset, while obligation is to the liability. The auditor is to test whether the assets are truly that are recorded in the financial statement truly belongs to the organization, to the client. An obligation assertion is saying that the auditor will test whether the client is meeting up with their what? Financial obligation as at when due. That if they have collected loan from the bank will give them offer letter and the repayment schedule. So the auditor will check whether there is an offer letter and whether the repayment schedule is being followed to the letter. Then the next one, right? The next of that principal risk is the presentation and disclosure assertion. That is, there is a risk that the assets have not been correctly presented and disclosed in the financial statement. Okay? So the auditor can use substantive testing to obtain evidence that the various assertions relating to the tangible non-current assets are valid. So if they bought an asset now, they bought a car, or they bought a property, plant and equipment, a generating plant, and they only recognize the value on the invoice amount, and the cost of logistics, the cost of transportation, the cost of commissioning, the cost of putting it to use have not been added to that asset on the asset schedule. That will have done what? That will have under report the true value of that asset in terms of what? Presentation and what? Disclosure. I hope we are getting it. So those are the principal risks of misstatements for the non-current asset. So let's look at the substantive procedures for tangible non-current assets. What are the things the auditor will do? What are the procedures the auditor will perform to obtain sufficient and appropriate audit evidence that the non-tangible assets, or I mean, I said the tangible and the non-current assets do actually what? Pass the assertion test on what? Assertion based on account balances. Okay, so the areas that the auditor will focus on are completeness. That is the true amount of that asset has been what? Has been captured. Everything that relates to that asset has been captured. There's no understatement. Existence, that the asset do exist. Okay, you need to physically inspect those assets. You need to carry out valuation of those assets, either at cost, okay, or it uses the other method, replacement cost or evaluation method. Any of these methods can be utilized. Okay, any of these methods can be utilized. So, like I said, during that valuation, right, if you use either replacement cost method, or evaluation method, you need to consider the reasonableness of the valuation. How realistic is that valuation? The auditor will check the valuation are regularly updated. We said that at least once a year, and it must be what? Consistently performed. It must be consistently performed. Then the auditor will also check the accounting for the rise or fall in evaluation. That the adjustment on that evaluation will also be an area the auditor will also want to check that they have posted it to the right count. Okay. Then you also go to the depreciation. The auditor will review the depreciation rate for reasonableness in the light of the nature of the asset. The non-current assets have different useful life. For instance, a building can have a useful life over 30 years or even more than that, while land is forever. Plant and machinery can be 5 years, can be 6 years, right? While motor vehicle can be what? 4 years. And you have your office equipment. Those ones can be 3 years. Your laptops, computer, you divide it into two: hardware and software. Okay? Hardware is usually 3 years, while the software is usually what? Annual. Okay? You will need to test it annually because you need to pay subscription annually on that. So all of these are what they are going to consider. So if you are looking at the asset, checking the depreciation or the impairment, they'll be checking that they have used the appropriate depreciation rate. For instance, motor vehicle, the standard depreciation rate for motor vehicle is usually 4 years. Some organizations right up there, they use just 1 year for their cars. Yes, there's organizations like that. But the best practice, or what is commonly available, is 4 years. Even our tax laws, capital allowances, recognizes 4 years. Then they charge 25% on it. All right. So the author will also check that you are applying the depreciation rate or depreciation, what do you call it now? Method consistently. There are different methods for calculating depreciation. You have the sum of digits, you have the reducing balancing, you have the straight line method. So if you have chosen straight line method, it should be consistently applied. Not that you use straight line this year, next year you use reducing balance, the other year you use sum of digits. You must consistently apply the depreciation method. Okay. Then you also need to test your asset, the client asset, against what? Impairment. And this will normally happen when you have clients that their products are susceptible to what? To obsolescence. Like now, if your client is an automobile company, automobile manufacturing company, they will be susceptible to what we call obsolescence, risk of obsolescence, because cars, they produce new cars every 6 months. Okay? So if for a model now, let's say there's Toyota 2024, by now, Toyota 2025 is already out. Toyota Corolla 2025, the model is out. So by August next year now, Toyota 2026 will be what? Will be in production. What that implies is that if you have the older version or older model of Toyota Corolla in your warehouse, automatically the value will reduce because people will not want to buy those ones again. People want to go for the newer version. Just like iPhone 16 now that is out. So most people are going to trade off their iPhone 15. So if Apple still has iPhone 15 in their warehouses, automatically the value of those iPhones would have reduced. So they will have suffered from what we call obsolescence. Because most users of iPhone always want to go for the what? For the latest. They always trade it in. So the value will drop. These are the things the auditor will check. We look at the nature of the what? Nature of the asset. All right? So other things the auditor will also need to do is to look at the what? Right and obligation. The auditor will check. You say you're the owner of this asset. Can I see the document that makes this asset to be yours? Oh, the building, is it for you? Can I see the C of O? Can I see the survey register? Okay, or survey documentation? Okay. If it's a land, they want to see the title of the land, the C of O, or governor's consent, right? For vehicle, you want to check the vehicle particulars, okay, for proof of ownership, whether it is your own or it's a car that was hired. Okay, so when the assets are transferred or they are hired, the auditor will request for what documentation that states the fee, okay, the terms and conditions for the what for the transfer. Okay, the same thing for the loan. Also, I said that obligation is to the loan. The auditor will request for the what the offer letter of the loan. We want to see that that loan was actually given on behalf of that client and not for any other person. It's not for the director, one of the directors of the organization, but mainly for the what? For the business itself. All right. So the auditor will now check the asset schedule, which is normally called the fixed asset register. It's now called asset schedule. The auditor will now check that asset schedule, that the balance they have there for the book value, net book value of the asset, corresponds or tallies with the balance that they have in the statement of financial position for non-current assets. And mind you, you always see that your non-current asset, we always have a note, okay, attached to it because it is not proper for all the assets to be listed on the face of the statement of financial position. So the auditor will now check whether there is a note explaining the breakdown of the non-current assets. So let's say the asset schedule, the note that explains it is note 14. The auditor will be expecting to see note 14 beside where you have the non-current assets. So anytime when he wants to confirm the figure, we look at what is the value there, 100 million. We go and check the asset schedule that the net book value for the assets also shows 100 million naira. All right? That's what we mean by the disclosure. Okay? Let's look at this question here. This is a typical ICANN question. Okay? During the year ended 30th June, year 6, Constructico acquired freehold land at a cost of 500,000 and built a distribution center on it. Using a mixture of subcontracts and own labor, the distribution center cost a total of 200,000 to construct. The construction was completed by the end of April. The choir set out the audit objective in respect of the above and substantive procedure that will be carried out to achieve this objective. The objective is to do what? To substantiate the procedure or to carry out substantive procedure that will help to determine whether these assets were actually properly reviewed or examined by the auditor. Okay? So this is the solution. So here's the solution. The land and distribution center exists as at 30th June year 6. And you can see that here. They say during year ended, look at it here. During year ended 30th June year 6. Okay, the land and distribution center exists. Then other thing you need to check, visit sites to confirm the distribution center has been built and is in use. It's not enough for you to say that you saw that the building has been erected. but you need to ask, has it been put to use? Okay, so you need to visit. That's where verification comes in. You need to what? Visit. So, Consortico owns the land and distribution center at 30th June year 6. Inspect the land registry certificate and or write the third party to confirm the authenticity, the ownership of those land. That all those documents is to indicate you are the owner of the land. Okay. Then another thing you also need to, apart from you saying that you are the owner of the land, you must have building plan approval. That is, you can build on that land. It's not a government acquired land. So you need to inspect correspondence confirming that the local planning permission was granted and ensure all conditions were met. So there's all, what I remember when we look at one aspect, I think is when we talk about, you look at it in what do you call it now? ISA 250 that says considering the laws and regulation in the audit of financial statement. That is ISA 250. You talk about that when you get to professional, but it's relevant to what we are talking about now. Okay, how is it relevant? Now, as an auditor, you need to check first of all that your clients have been conducting their business in compliance with the laid down rules and regulations of the land. Audit does not condone illegality. You don't audit illegality. So the auditor must check, first of all, before he starts, must check that the building, the assets that they are going to audit has the appropriate permission or approval from the requisite agency giving out those approvals. Okay? Then you also need to check whether those assets have been what? I mean, those assets during the cost of building has been what? Capitalized. But why do you need to capitalize? That's when you are building, most organizations, when they are building, they always have what we call project cost or project manager. The project manager is to be able to enable them to be able to track all the costs attributable to completing that particular project. But at the end of the day, all the costs will be added together to determine the full value of that asset. The cement, the nails, the sand, everything that they use to make that building to stand erected will be factored in the what? In the project cost. So at the end of the day, what will they do? They will capitalize it. Because it is the cost, the explanation is of a capital nature that will last for more than 1 year. You will capitalize it. Okay? Then another thing we also need to confirm. We need to confirm from the management. Do they have a policy on capitalizing expenditure? Do they have a policy on what? Capitalizing expenditure. This will not stand alone. This will not be a standalone policy. It's usually embedded in the standard operating procedure for the finance and accounts department. You always find it there. And it varies. For some organization, the expenditure that they capitalize start from as low as what? 30,000 naira. While some, they don't start at what? 1 million naira, depending on the organization. There's no fixed rate to determine what your capitalizing expenditure rate should be or amount should be. Okay, the auditor wants to, we always ask for that. All right. Then other things the auditor will also ask for, right, is to check that if the land and the distribution center have been what? Appropriately valued at cost. What will it do? The auditor will inspect completion statement for purchase of land. So when you buy a land, they will give you all the document that goes for that land because of future references. The other thing that also need to confirm to determine whether it's valid at cost is to obtain analysis of cost of building the distribution center. That is the project cost I'm talking about. The auditor will sample some of those purchase invoices for raw material and subcontract costs. including the cost of labor. Labor is part of the cost of the building. Those people that are paid to come and work as foreman or foremen, those people that are building contract, all of them, right? Their pay, everything will be added to the cost of that building. Then you also need to look at evidence in respect of any overhead capitalized. I've talked about capitalization of expenditure. Then you also need to recalculate the depreciation charge for the year, taking into account that the distribution center was not completed until the end of April. These are procedures the auditor will carry out there. The land and the distribution center are appropriately disclosed in the financial statements. Okay? Then the auditor also review the disclosures in the financial statement and ensure that they are what? They are correct and clear. Mean that what? They are easy to what? To comprehend. They are easy to what? To comprehend. Then lastly, the auditor will check that the schedule of cost agrees to the figure in the financial statement. So all those project costs, the total value of it must tally with the value of that building or distribution center as posted in the statement of financial position. Any question before we proceed? Does anyone have any question? Any comment? Any observation? Are we good? Can we proceed?
Yes, sir.
Okay, thank you. So let's continue. All right. So we go to the next area. All what you have been looking at before now is on the tangible, okay, non-current asset. Now we are looking at intangible non-current asset. Now these ones, right?
Hello, sir.
They are
So, sir,
yes.
we can see your screen. We can
You
only
said?
see your.
That's my screen. Let me reshare. Sorry. Let me reshare. No problem. I'll reshare if you can't see.
Hello, sir.
Yes, please go ahead.
So on the amount that a company can actually decide on to capitalize,
Yes.
is it that the company can just pick any amount and just say that, okay, this is from any cost above this, just capitalize, or there is a particular standard that guides things like that?
I'm not sure there's a particular standard that guides that. But what normally happens is that from the nature of the transactions that they embark upon, they incur on a daily basis or periodically, that will form one of the bases they are going to use. It's not the only base that they are going to use. It forms one of the bases. The other factor they are going to also to consider. They look at what the nature of the transaction. For instance, now, you cannot capitalize what we call biro, pen. You have to capitalize biro. Why? Because biros they are not built to last forever or for a longer time. You understand what I'm saying? So another thing you need to look at is what is the nature of what you are buying. Okay, that's another thing you need to look out for. And thirdly is the amount. How much are you spending? So if you are talking about buying, you're talking about something that is fragile, that cannot last for more than 3 months. You can't capitalize such. If you're going to capitalize, it must be something that can last you for more than, let's say, more than a year or more. Those are the things you capitalize. For my own understanding. Thank you. Okay, so we go on to the next area, which is the intangible non-current assets. When you talk about intangible non-current assets, we are looking at what? We're looking at those assets, okay, that they exist, but you can't see them, but they do exist. Okay? You can't see them, but they do what? They do exist. The 5 senses or sense organs cannot see them, but they do exist. Typical among them is what we call the purchase goodwill. Purchase goodwill is a type of intangible non-current asset. And you know that when you talk about goodwill, goodwill of a business, you cannot see it. But the time the time it normally comes to bear, where you normally see it, is when there is an acquisition. When the company is being brought over, you will see the value of the goodwill. Okay? Just few months ago, or 2 months ago, last month, not even 2 months, last month, Unity Bank and Providence Bank, they came together, okay, to form one big bank, okay? And even CBN gave some money to cushion the effect for the Unity Bank. What am I trying to say here? Now, Providence Bank, you will agree with me that it's a regional bank. It's not found everywhere. Their branches cannot be compared to the branches that Unity Bank has. Okay, the branches that Unity Bank have is more than 200 all over the country. So ultimately, it means that to a large extent, or to some extent, Unity Bank has what we call what? Goodwill. Okay, they have what we call what? Goodwill. Because the Providence Bank is going to ride on those branches to extend their what? Their presence throughout Nigeria. All right. So you see goodwill, you see the purchase goodwill that's there. Another thing I can also see as goodwill is when you have what we call branding. Branding is another type of intangible non-current asset. Intangible non-current asset for branding means something that has to do with what? Good name. That is like trademark. This business has been in existence for over 30 years, over 40 years. But a business that's been in existence for over 40, that means they have a good name, they have a trademark, they have a good reputation. You cannot see it, but you know that it exists. Okay? Other examples of intangible assets, intangible non-current assets, are also intellectual property. Intellectual property. Okay? You cannot see this intellectual property, but they do exist. All right? So all of these come what we know as what? Intangible non-current assets. Okay? All right. So let's take a look at intangible non-current assets. Just as we have principal risk for the tangible non current assets, we also have risk. So one of those risk that you have, they also face is the risk of what? The risk of what? Completeness. Okay, that this non-current, this intangible non-current asset, do they actually exist? And if they do exist, what is their value? What is their worth? Because if the worth is not properly computed, okay, it will affect the purchase consideration. Okay, it will affect the purchase consideration. So if the purchase consideration is low, automatically the purchase goodwill will also will be affected. Number two, right, is also the what do we call it? Existence. Does this intangible non-current asset, does it exist? Yes, you cannot see it, but to a large extent, you see the effect as time goes on, as the business continues to what? To grow older and waxes stronger. All right? They also have presentation, risk of presentation and disclosure, because if it's not properly presented, you will not know, because the owners, the people that have contributed their capital, their finances to sustaining the business over the years, they have right, or they have return on their capital. and the return on their capital invested is the goodwill for them. So when they pay the goodwill, they will be the one that will do what? That will enjoy it. All right. So the emphasis of the substantive procedure will be on one, existence. Does the intangible non-current asset, does it actually exist? Number two, you look at the valuation, you need to value it. All right. You need to what? You need to value it. Yeah. Another thing you also need to look at is looking at what? The developmental cost. There are two types of costs. We have research cost and we have the developmental cost. Okay, as stated in IAS 38, research cost is usually written off. Exist for you to say, oh, this developmental cost can be what? Can be termed as asset. Why did I say so? Now look at the research. Now you want to let me look for a company. A company wants to, let's say Toyota, makers of Toyota vehicles wanted to invest in developing a car that can fly. It's a concept, it's an idea that one day cars will fly. And they did the research. They spent millions of dollars on it. At the end of the day, they found out that the car can never fly. Okay? All that money will be what? Will be money wasted because it will form part of what? Research. They're just trying to test whether this thing can actually, this idea, this innovation, or this concept can actually come to light. So they write it off. But if they've gone into a stage where they now say that, oh, there's a possibility that this thing can materialize, right? They can decide to do what? They can decide to value it and see to what extent can this be to the benefit of the organization. And some of these things are contained in the conditions as stated in what? IAS 38. IAS 38 is talking about intangible assets. All right? So, how do you carry out test of detail for intangible assets? Remember, your test of detail is one that replaces your substantive testing. You know, I told us before that when the auditor want to place reliance on the internal control system over financial reporting, you will perform two tests because you need to obtain sufficient and audit evidence. You need to conduct two tests. Before now, you used to call those two tests compliance testing and substantive testing. And I'm telling us now that that will not be forgiven if you use them. If you use compliance and substantive testing now, I'm telling you, the examiner is going to be very furious with you. In fact, you'll be penalized. So the new name of those two tests now, they are test of controls. That test of controls replaces the compliance testing. We have looked at test of control, right? Then the second test is called test of detailed transaction. Now the test of detailed transaction is one that replaces your substantive testing. So we are conducting test of detailed transaction, you are going very deep, you are going very detailed into looking at everything, uncovering, turning all the tables, checking for everything. That's what you do when you carry out test of detailed transaction. Okay, so for the intangible non-current asset, especially for the purchase goodwill, you need to confirm how the business was acquired and confirm the consideration paid for the business acquired. You know, I said something about purchase consideration. Okay, so the company taking over another company, we need to establish that the business that is being taken over do enjoy some form of what? Purchase goodwill. Okay, now they also carry out valuation of the purchase goodwill. So the auditor will also review the reasonableness of the valuation based on the net assets acquired. All right. The next one, the auditor will check the calculation of the purchase goodwill, purchase consideration minus the value of the net assets. Okay. You know that your goodwill, you will need to check, you will check it, okay, to be sure that the calculation of the purchase goodwill, because like I said, if it's not properly computed, if the purchase consideration is not properly calculated, right, it can also affect the purchase goodwill. Then you also review the possibility of an impairment arising, that is, the goodwill has suffered what? Impairment. Okay? And the auditor will also ensure that the adjustment against the impairment has been what? Has been properly carried out or properly posted. All right? Now, the other types of intangible assets, excluding development costs, are these ones that I want to talk about. So the test for other intangible assets other than development costs are similar to those that will be applied to tangible non-current assets. So what that implies is that all what we discuss under the tangible non-current assets are applicable to other types of intangible assets. That is, let me explain. So let's go up. All what we discuss here from this point all this one, completeness, valuation, all this one that we discuss. I'm just showing you so that you understand what I'm saying. Depreciation and impairment. All of these are what, as we discuss it here, is also applicable to other intangible assets, excluding development cost. Okay, excluding what? Development cost. So data will confirm the existence of the intangible asset, the cost, okay, and the client entity legal right to the acquired asset by looking at the purchase documentation. The author will check the amortization calculation for accuracy using the entity's stated policy. The author will also consider the possibility that the asset has suffered or they have suffered what? Impairment. Okay? And how these impairments will be treated will need to be discussed with the directors. All right? Then the auditor will also ensure that all impairment or any impairment has been correctly dealt with in the ledger. The auditor will check that they have been properly accounted for in the ledger. Now, for the development cost, their own procedures differs. Okay? The test of details for development procedure states thus. IS 38 states that an intangible asset arising from development cost or from development phase of an internal project shall be recognized if and only if an entity can demonstrate all of the following. Number one, the technical feasibility of completing the intangible asset so that it will be available for use or sale. I gave an example of that car. If Toyota Manufacturing decides to go into a project of what? Manufacturing cars that can what? That can fly. Okay? So when they embark on that research and development that they want to build a car that can fly, if they have performed the development up to a stage that they are convinced that just a little money, this thing will come into existence, then it has changed from research to what? Development cost. Let me give you another example that you can understand very well. Elon Musk, right, the richest man in the world at present, has a project that he wants to be taking people to the moon. You know, people that go to the moon are usually astronauts, but that is conventional. But as a non-conventional person, Elon Musk said that he wants to start to take people to the moon and back. Just like people go to Bahamas and come back. Want to start taking people to the moon to experience that space flight. And that project is called Project X, if I'm not mistaken. I mean SpaceX. That will be the conveyor, the transport that would convey people from US or wherever to moon and back. SpaceX, that's the name of that project. Now, as at the time he started this project, some people said that it is not possible. But to him, he said impossibility is not in his dictionary. So what did he do? He went on it. I was reading sometime earlier this week or so that he's planning the first set of people that will take to the moon on that SpaceX. Of course, not going to be for it's not for the faint-hearted. Number one, it's not for every Tom, Dick, and Harry. It's for the rich and the high and mighty, because it's going to be very, very expensive. Okay, imagine you are going to US now. You are spending almost maybe 7 or 8 million, I don't know, for the economy, for the business class or so. So we are going to space or moon. Maybe you're spending times 100 of that, because the distance from Earth to moon is in light years. So obviously you spend way more than that. Okay, so now that project, he has a vision. That was an idea. He has a vision that this thing will come to pass. And now, as at the time, is the first year. Yes, maybe it has not materialized, but it didn't stop. It continued. Now this year, now they want to recognize the stage of that project. It will go on as what? It will pass in as what? The development cost. Why? Because there is a possibility, there is a ray of hope that this project will come to life. This that will stop this way from not coming to life is maybe if the world ends. Even if it dies, it can still come to pass. And that's what I'm saying. He has put the mechanism in place to 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 bet this innovation, this idea of his. Okay, so that's what they are saying here. They said the developmental phase of an internal project shall be recognized if and only if an entity can demonstrate all of the following. Number one, the technical feasibility of completing the intangible asset so that it will be available for use or sale. That is the example there. I hope you can relate. The next thing they're going to also, another condition you also need to look at is intention to complete the intangible asset and use it or sell it. You still knowing that example I gave us, right? Number next, his ability to use or sell the intangible asset. He's still talking about that example. You know why I gave that example? Audit can be very, very boring, and sometimes it can be so abstract. So I want us to be able to live in the present, live in the moment, to understand how these things operate. Okay? After this class, you can go and Google it. Some of us have iPhone. Go to AI, chat with your chat GPT, ask about it, ask these questions. We'll give you more information. Okay? So your phone should not be just for you to snap or to chat or to do things. Use it also to explore, get new, get updated, okay? Get informed, right? So another condition is how the intangible assets will generate probable future economic benefits. You know, I said that what you will be charging. First of all, I said that it's not for every Tom, Dick, and Harry. I said it's for the high and mighty, the rich and the affluent, right? So if you are spending like 6 million or 10 million to travel from Lagos to Abuja to US or Canada, So imagine that distance. That one is a small fry for me to travel from planet Earth to the moon. You spend way more. You'll be talking about 300 or 400 or even $1 billion. I don't know how much it's going to charge. You need to look at that, okay? Then also, the author will also look at the ability to measure reliably the expenditure attributable to the intangible assets during its work developmental stage. All of these I have explained to us, okay, in the course of trying to explain that Elon Musk project, okay? Then the audit test, all that things that we do, the one we had discussed earlier with the audit procedure for development cost. Now, these are the audit tests that we carry out. Number one, discuss development projects with management, other relevant senior personnel and other key stakeholders to assess the feasibility of a project and product. So it is only the conceiver, the person that conceived, the person that vetted this idea that can give you insight as whether this thing will come to pass or not. All right. Next one, review the projections and forecasts for using resources and generating future economic benefits. So by now, Elon Musk will be calculating how much the SpaceX project will fetch his company in the next 5 years. You know, he's already the richest man in the world. That means that his wealth will continue to what? Continue to grow. All right. The next thing, the other test that we also conduct is to assess production and marketing plans and whether a market or use actually exists. You know that some people, right, they don't have any problem. They just want to enjoy life to the fullest. Some people now, they just want to go, their next adventure is to go to the moon. Okay? Their next adventure is to do what? To go to the moon. Like that project that somebody did, I forgot the name of that, it has escaped my memory now. That when they say they want to go under the sea, to go and sight where the Titanic that sank in 1912. They want to go there and see the debris or the shipwreck, that shipwreck that happened in 1912. How bizarre can that be? Nigerians can't think in that way. All the people that died in that incident or that accident, they are not Nigerians. You understand? They are not Nigerians. They are people that are multi-millionaire, people that are already high and mighty, that they don't know what to do with their wealth. They just want to die. Okay? They don't have anything in their mind. They just want to explore, live life to the fullest. And I can't think of that. I cannot fathom why what fancies me is to go and see how a ship that wrecked in 1912, how that experience is going to affect or change my mind or my well-being. I cannot wrap my brain around that. But some people, like I said, they have everything, right? So they have nothing they are thinking about. They don't have any problem. They don't have any issue. They don't have any concern. They don't have anything else they want to achieve. They just want to explore. That was why 7 of them, maybe 6 of them, went under the water, under the sea, to the point where I don't want to talk about it. So it's just for your knowledge. Anyway, that's why I'm just sharing this thing so that I will understand how this thing plays. All right. Then consider funding requirements to completion. So let's say it doesn't even have enough money to complete it now. But the thing is about 90%, 95% completed. So you can see that light that this thing is going to come to fruition. What will you do? You can go and borrow money. And if he's going to borrow money, the bank will request for certain documentation, okay? To be sure that they are not giving money for frivolous projects, okay? Because every loan that bank gives, they also want to what? Benefit from it, okay? So other things the data will also check, other tests data will carry out, whether the entity will actually be able to use or sell the assets. Let us also discuss with management intention to complete the asset and either use or sell it. All right? Use or sell it. Then it also inspects developmental contracts and records supporting okay, supporting and safeguarding patents. Then the author also tests controls around the documentation and safekeeping of scientists' notes, discoveries, and conclusions. Then next, the author will also test a sample of the development cost for appropriate capitalization. And lastly, the author will obtain written representation from management as to their commitment to complete the project and either use or sell the asset. So with this, we are done with what? Chapter 10, which talk about what? Substantive procedure as it relates to the non-current asset. This was what we couldn't finish last week because of the disruption on my system, the interruption on my system. So that was why we started from there. Is it clear? Do you have questions before we proceed to today's topic? Any question? Any comments? Any observation? Can we proceed? Yeah, good, right? Okay, so thank
Yes,
you.
sir.
Let's proceed to the next topic. Okay, thank you so much. Let's proceed to the next topic. Today's topic is for my own end, right? Is the last chapter, okay, which is chapter 14. All right. So after this class, the next facilitator, right, will be taking us. Sorry, I'm coming. The next facilitator will be taking us through. Sorry. Will be the one taking you through the remaining chapters, okay? So let's see how this goes today. So that topic is, I'm coming, sorry. Okay. Okay, can you see my screen now? Can you see business system and associated information risk? Can you see it? Can everyone see it?
Yes.
All right, thank you. All right, the time is about 9:45, right? The class is supposed to end by 11. So let's continue. Now, this is one aspect that most students do not like to talk about, IT audit. And understandably well, right, that it could be very, very boring. Or for some of us, for lack of a better word, some of us have not experienced it in real time, okay? Some of us will be making use of systems, or some of us will make use of manual operations, that some of these technological advancements, right, we are yet to embrace them fully, okay? So because of this topic or this chapter is always an area that most students do like to talk about. And I can knows that students don't like this topic and they always set questions on this topic. So the advantage you have today and the next time we are going to meet concerning this topic is that you will do yourself a whole lot of good to understand this topic once and for all. Take it in, understand it, comprehend it, then do what? Run with it. So that anytime exam comes and you see questions on these areas, you can easily tackle those questions and get your cheap marks and go. Because most times questions on this area are usually very, very straightforward and direct. It doesn't need you to beat about the bush. Just answer the way you see. The requirement is always straightforward. So, but if you don't know, if you are not even comprehending this chapter before, and when you see question that talks about IT, you just run away. Let me go and do the ones that I know. But I'm encouraging us because this is an area that you can easily get some marks, if not all the marks. Because the question they always ask here is usually what? Straightforward and direct. And it's very, and to my amazement, right, this topic is very, very relatable. In fact, just like any other topic that we are talking, it's very, very relatable. It's what you see every day. Just that some of us, we can't picture, put our minds, we cannot wrap our minds around some of these things. But these are things that you see every day. First of all, IT system has come to stay. IT has come to stay. You cannot run away from it. It's either you embrace it or you are left behind. The world is changing drastically. That anyone that does not embrace technology, I can tell you, that person will lose big time. I'm telling you for a fact. You have to start embracing. If you are yet to embrace it, start to embrace IT. You do your whole world a lot of good. It's going to save you a lot of stress. Like all this AI they're talking about now, if you can embrace it and start using it, I'm telling you, it's going to go a long way for you. Because you'll be working very smart. And I'll be doing hard work, racking your brain. You will not do that because the AI is there for you to think for you. Even though it's not perfect, but to a large extent, it can prompt you. It can put you on the right pedestal. Then for you now build on it. So that is it. So let's look at this topic. Okay, please open your mind, and it's something that you can easily relate with. I can tell you for free. So the topic is business system and associated information system risk. What is the business system? What is the system? A system is what? Is interconnected units. Okay? When you talk about a system, is what? Things that are interrelated or interconnected. Like the human body now is a system. The human body, if you say that, we have two hands, and most of us, we don't use our left hand, we use our right hand more often than not. Only few of us are ambidextrous. Only few of us can use our two hands. Okay, those that can use their two hands, they are called ambidextrous. They can use it very well. Very few people can do that. But most people can use their right hand more than the left hand. And we have some people that they are good with their left hand, and their right hand is not as good as they cannot use their right hand as they do with their left hand. Yes, we have people like that. So let's say that majority of us, we are comfortable with our right hands. But time you say, this left hand, I don't know, it's not working, it's not serving the purpose. But have a weak low on that hand, that left hand, and you come and tell me whether you'll be able to sleep in the night. Okay? So what I'm trying to say is that in the human body, you have several systems. You have the circulatory system, you have the respiratory system, okay? You have the brain, the nervous system. You have so many systems in the human body. So what we are talking about here, we're looking at a business. In a business, business is a combination of different interrelated components, okay? So a business system refers to the interrelated component of activities driving exchange of value between interacting parties and arising from the exchange of goods and services. So if you look at the business, you have the accounts department, you have the HR department, you have the IT department, you have the legal department. All of these, they are working together. You have the sales and marketing. Okay? All of these, they are working together to do what? To drive exchange of value. Okay? Between interacting parties that's going to patronize your products and arising from the exchange of goods and what services. So the business system is what? Is very, very clear. Another way to look at the business system is to say that it cuts across a number of component parts, which is what I've said. Okay, the sales and marketing, human resource, finance and accounts, business development, product development, corporate services, data center, all of these, They are working together for the achievement of a common objective for the what? For the continuing existence of the what? Organization. Okay? But with the introduction or with the advent of information technology is to aid our business, is to help us, is to guide us, is to make life easier for us, be able to achieve our corporate organizational objectives. But one thing we have seen is that even with the introduction of this IT, it poses or it exposes us to a whole lot of other risks that we did not want phantom or consider in the first place. Hence we talk about what? IT risk. Okay? Now, if IT risk is not properly managed in an organization, it can bring about the end of that organization. I hope you know. If the IT is not properly managed, it can bring about what? The end of the what? Organization. Let me give you an instance. For some of us, right, that has been around for a while, there's what we normally call how do I describe it now so that you understand it? Okay, let me do it this way. Before the advent of telephone, the cell phone that we are using, right? Most of us, even if you don't know, if you look at the trajectory of the development of phones in the world, GSM, Global System for Mobile Telecommunication, most of them started with this Nokia 3310. Okay? Now, that was the advent, that was how phone started in the world. Now, nobody had thought of a time when the phone, we have a camera embedded in it. That is, you can have your phone that you have camera installed on. Nobody thought of that before now. You understand? So, Sony, I think it's Sony or so, right? They have their cameras. Okay? They have their cameras. So, their cameras as at that time was, Sony still make cameras up to today. Okay? So, their cameras were very, very, very good. People use it, people love it. It brings out good picture, good product. So one of the product development who that work in that company then, okay, had a discussion, okay, with the top management that why can't we think of developing a phone, right, that has what? Camera. The management said that is not feasible now. That would take us. They were just not challenged. They don't take the person so seriously. So the person left because out of frustration, he left that. When you are trying to sell an idea to somebody that you think that's supposed to run with your idea, but the person now decide to be a wet blanket, you always want to first of all, you feel demotivated. Number two, you feel sad. Number three, you feel you are no longer welcome in that place. That was what happened to this person. The guy left. I don't know whether the person went to Apple or so. He went to another organization. And guess what? He sold that idea to them. And those people, they welcomed that guy. Say, oh, brilliant idea. And they developed this idea and they ran with it. And that was what brought about the end, okay, to their reign as the best camera manufacturing company. Then they are still doing well now, but I'm talking about before. Most people now, they take quality pictures with their phone. That was the genesis of that decision then. It's an IT risk, yes. If that one is not too clear to us, let me give you one that is even more, that will be clearer to you. You all know BlackBerry, right? That bag that was in those days, in the 2000s, right? I mean, 2000 and early 2000s, yes. BlackBerry that was mainly for the high and mighty also. They always have the BBM then. That was the only phone that has BBM, BlackBerry Messenger. So rather than you to be sending message, so if you have someone that has a BlackBerry phone now, rather than for you to be bothering, texting the person, what we just request for is the BBM pin. There's a pin, there's a unique ID that comes with every BlackBerry. Okay, so once you're able to get the person's pin, that unique ID number, you can easily chat with that person. You ping that person, you chat with that person. Okay. Now, there was a time, that was the main reason why people are buying BlackBerry. Until one time, they thought it and said that, oh, I think we are comfortable, we are the leader, nobody can beat us. They sold this idea, this BBM, I think they sold it to is it Samsung they sold it to, or Sony, one of these Sony Ericsson or one of those companies, they sold it to them, this phone making company. And guess what? Those ones, they ran with it. And that was the end of BlackBerry phones. If that one is not clear, there's another one again, Nokia and other phones. Nokia started, or one of the companies that started phone manufacturing in the world, right? Now, Nokia thought that because they have gotten to the peak, they say they cannot fail. And then they just add this 310. That is the model that they have. And some other new brands that they had. But people were telling them that you need to upgrade, you need to keep developing, you need to keep doing research. They say, no, we are fine here. Until when, because they did believe that a time will come when we have this kind of screen touches phone that we have. All their phones had keypad as at that time. That's what I'm trying to say. They never thought there would be a time when we'll be having screen touches phone that we are using now. So when Samsung came up with screen touches phone, they could not meet up. Other phone makers too joined. Before you know it, they took over their market share, and that was the end of Nokia. It's just now that they are just trying to get their footing. If they had remained and they had been consistent with all what they have been doing since that time, I'm telling you by now, even Apple will be under Nokia. So all of this I'm telling us are ideas that relates to what? IT risk. All this I'm telling you are ideas that relate to what? IT risk. Okay, so that is the introduction of this chapter. So let's continue. Okay, so let's continue. Now, if another thing you also need to look at now is the other aspect where IT has helped our work-life balance. Okay, what do you mean by work-life balance? Imagine before now, accountants, they will have several sheets, foolscap, A4 paper, sheets stapled together with numbers containing those papers. And imagine an accountant will now be taking his calculator and be punching those values, whether those values correspond at the end of the day. You know that can be very, very, very tasking, using a calculator to add up, to sum up several pages of numbers. Okay? Now, imagine now that so many new things have taken over. They've made life easier for us. Okay? So how has those innovation in IT, how have they helped to make our life easier and much more smarter? We're going to look at this aspect, the advent of new technologies and how they have impacted our business life generally. The first one we look at is what we call cloud-based accounting system. Cloud-based accounting system. What do you mean by cloud-based accounting system? Cloud-based accounting system is a system where all the postings that you do on the accounting system, either an accounting package or an ERP. Now, what is the difference between an ERP and an accounting package? Let me tell us. An accounting package is solely used for accounting functions, majorly. It's mainly used for accounting functions, majorly. Postings, generating financial statements, generating trial balance, all of that in raising journals. That is what you use for accounting packages to do. Example, your Tally, QuickBooks. Okay? Tally, QuickBooks. These are examples of what? ERP. Examples of accounting package. Then you have the ERP. ERP is known as Enterprise Resource Planning. Enterprise Resource Planning. Now, this is a more advanced nature of the accounting package because this warehouses every other module. Okay, every other operations within the organization, they are contained in this enterprise resource planning. So in an enterprise resource planning, you don't only see accounting module there, you see HR module, you see sales and marketing module, you see manufacturing module, right? You see inventory module, you see reporting module, you see so many things there. And the beauty of this is that several users can be working on using the same server, okay, at the same time without any interruption. Several people will be tapping resources from a central point, which we call the server, or we call it the repository. They will be working on it all at the same time, and there will be no interruption. We call it enterprise resource planning. So what I'm trying to say here is that before now, where you have accounting packages and ERP, what normally happens is that the organization will always maintain an office, which we normally call the server room, where they are going to keep all the physical servers of those accounting packages and the ERP on their premises. So you always see that they talk about server room. Don't go there. It's not to unauthorized users. You always see there. Unauthorized users are not allowed. You always see all those things there. Okay. So what that means is that is a place where they store all the resources, information about the organization. And you always see that place is usually under lock and key. But the bad part of this, the disadvantage of this is that once you are outside the premises and you want to utilize resources from the server, once you're out of the premises, you can no longer access the information on the server. Why? Because you can only access them when you are connected to them physically. And the only connection you can do to them is by connecting them via the what? Via the cable. The RJ45 and the RJ25, all those cables that they use to connect, saying that this will give you internet, that is what you use to connect with. But after a while, people say that, oh, this is making work to be slow. You need to start to store in the cloud. So all these accounting packages of this generation, the ERPs of this generation, they don't usually allow for physical or on-the-premise storage again. They now allow for cloud storage, cloud-based storage. What that implies is that you can store in the cloud anywhere you are at any point in time, provided you have internet connectivity. You can check information on your server online, real time. That is the beauty of your cloud-based accounting system, because you don't need to now say that, oh, I don't have a cable. I'm outside the office. I cannot work from home now. That is what makes people to be working from home. You can work from anywhere now because of the cloud-based accounting system. And that is a huge improvement. Okay. Number two, we have what we call big data and analytics. Now, before now, like I said, I gave an instance of when those days people will be using calculator to cast and cross-cast figures on long sheets of papers. Okay. So, but now we have what we call big data and analytics. What do we mean by big data? Big data is the use of what? Processing, I mean, the use of advanced technology, right? To process unstructured data. Okay? You use what? Advanced technology to process unstructured data. Why analytics is presenting that unstructured data or present that structured data in a more presentable format. Okay? So the big data now, you want to work on several numbers. You need to bother yourself. Whether the numbers are arranged or they are not arranged. Once you're able to get those numbers imputed on an Excel to start with, and you are proficient in the use of Excel, you can organize the data to make informed decision about whatever you are trying to achieve. And aside from that, that data that you have arranged can also present them in what? In a pictorial form, in a bar chart form, in a graphical form, whatever form, just to make so as to allow for what? Formed decision making. All of these are made possible by what? IT. The third one is the social media. Before now, most organizations, they exist physically. When they want to write the addresses, you always see the physical address of their businesses. But since the advent of social media, physical addresses are not the only details that are contained about an organization. They always have their what, social media handles, like Facebook, at Instagram, at TikTok, all of those, at LinkedIn, all of these are usually added. In fact, some organizations don't even have physical address again. What they have is their social media handles, and they are making big businesses. And in 2021 or 2022, one of the Kardashians' daughters, was the youngest billionaire at the age of 21. He became the world youngest billionaire at the age of 21. He was basically selling perfumes and jewelries, and she never had a physical shop. She was selling it online every time. You understand what I'm saying? So social media has made businesses to be what? To be very, very easy and what? Affordable. The third one is talking about blockchain technology. Blockchain technology. Now, blockchain technology is a little bit advanced. But for some of us, the one that we are always familiar with is one that has to do with what we call the cryptocurrency. Cryptocurrency is just a type, it's one of the many types of blockchain technology. Okay? It's one of the major phases of what blockchain technology. What do you mean by blockchain? How does it work? Now, remember that is what we don't know that we're always scared of. You see that so many countries ban the use of blockchain technology or cryptocurrency in their countries. Why? Because they don't understand the architecture behind, logical reasons behind how this system works. They don't understand it, and that's why they banned it. Now, for commonsensical purposes, right? Let me explain what blockchain technology is. Now, blockchain technology, when it is fully optimized, it promotes what we call data security. Before now, let me use something for you. Let me try to explain it for you so you understand what I'm trying to say. Now, you want to work on a saved document. Somebody worked on a Microsoft Excel document or file. Microsoft Excel file. He has worked on that file and he sent it to you. And you also worked on that same file. What happened is that the moment you save that file changes its identity from the first person that sent it to you. So you can claim ownership of that file. Why? Because it's only your name that will be showing there. But in the case of blockchain technology, it allows for transparency. All those that have worked on that file, their names, it keeps record of them, keeps their record. And before any change can happen, when you deploy blockchain technology, there must be unison of acceptance. That is, everybody that has worked on that document must agree for that edit or modification be done. You understand what I'm saying? So you have an exact document that before now you can easily change it and becomes your document. Unless one is very savvy, they go and check the root of that file, say, oh, okay, this document does not belong to you, but on the face of it, you'll be showing your name, right? So what we are saying here is that with blockchain technology, you can track, it allows for what we call distributed file system. One of the attributes of blockchain technology is that it allows for what? Distributed file system. That is, whoever wants to work on that file, whoever wants to modify information on that file, must seek consent from the people, other users of that file. And that is what makes blockchain technology to be what? To be very, very unique. It's still at the developmental stage, right? But that is what we mean by blockchain technology. And where you have blockchain technology, what does it do? It allows for what? Transparency. Okay. It also encourages or it discourages plagiarism. You cannot steal somebody else's idea. You understand? You cannot steal someone else's idea when you have blockchain technology, or when you incorporate blockchain technology. All right? But like I said, it's still at the developmental stage. That is what you need to know about blockchain technology. The last one is called artificial intelligence and robotics. This cannot be overemphasized. There are so many jobs that will be taken over by artificial intelligence and robotics in a few years to come. Some restaurants now, they've stopped recruiting people as chefs to come and cook in advanced countries. So I'm not talking of Nigeria, in advanced countries. They just incorporate robots. What will you do? They give him routine task, what you should be doing. Once he's done with it, he applies and you get the same result. So food is science. Food processing is what is science. Once you know the right quantity of this, of that, of those ingredients that you're going to mix together to get that, you are going to get it. And that's the beauty of IT. IT, which we call artificial intelligence and robotics. Okay? Artificial intelligence, it relates to mirroring or developing a system that mirrors how humans operate. That mirrors how humans operate. That's what we know as artificial intelligence. The only thing they cannot do is that sometimes they cannot make decisions, but they can perform routine tasks. You can see in advanced countries, they now have what we call autonomous vehicles, cars that drive themselves. It's already available. It's in Dubai. It's in US. You order a boat or you order an Uber, and the car that will come and pick you will be a driverless car. You will not see any driver there. But the door will open. You come in, you hop in, you sit down, make yourself comfortable, and will tell you, just like when you board a plane, it's also so and so, your destination is also so and so. It takes you like 30 minutes to get to that place. The road, there is no traffic. All of that details will be given to you. Then in the next few minutes, you arrive at your destination. And that's how it works. When you get down, you're about to get down, you swipe your card and you make payment. Then that ends the transaction. You get down from the vehicle. That is artificial intelligence at work. Robotics and artificial intelligence, they are similar. The aspect of robotics is trying to introduce robots, okay? The engineering of robots into our day-to-day lives. Okay, for instance, the autonomous vehicle I made mention of is a type of robotic vehicle too, because the vehicles are being controlled by what? Robotic cells. They are being controlled by what? Robotic cells. Some people that have lost part of their body, some people, right? Their heart is damaged. The heart that pumps blood is damaged. What normally fix there? They go to the hospital, not in Nigeria, not they do it in Nigeria. They go and put a spacer there. They call it spacer. Or there's another name they call it. I think a spacer. They call it spacer. That spacer. What does it do? It regulates the pumping of the blood. You know, the work of the heart is to pump blood. So when the heart fails, for some people that are very rich, they will go for a surgery and they will insert that pacer into their heart and will performing the work as though the heart still functioning well. That is robotics. Some people have lost part of their body, their limbs, their legs, and they have been able to improvise with prosthetics that have been mechanized to mirror how, because they try to design it, they try to design it in such a way that it works with your brain and it is being controlled by your what? By your brain or by the brain. These are robotics. Okay? You know that there are some devices now that you have around your house that can do chores, that can clean your house. All these are robotics. During COVID, okay, hotels in China where they isolate people, it is robots that sells people food there. You know what you go because of physical contact, because of what do we call that thing? Social distancing. Okay, they will send robots to go and serve food. That's what we mean by robotics. Okay, and artificial intelligence has gone very haywire now. That Elon Musk has said that as time is going now, or as time passes by, people will no longer be dying. People will not even age because they are developing some chips that will be inserted in the brain of humans, or human brain, that will make people to become ageless. People will no longer go old again. All of these are made possible by the use of what? Artificial intelligence and what? Robotics. Even women that want to give birth, all of these are what the artificial intelligence will do. Okay? Now, I've explained all this all these new
Hello, sir.
technologies are now. Yes, I'm with you.
Okay. I've been following your explanation, but I think the header to this whole um, cloud-based accounting system, data analysis,
Yes.
data and anal analytic, abi, something like that, social media and all that.
Yeah.
The header was the technologies that have potentials to disrupt the auditing process. So how does this whole thing
Yes.
now disrupt the
Yes.
auditing
Now, I'm
process?
going there now. I first of all need to explain what they do, first of all, before we now go to how it affects the auditing process. That's where I'm going now. Now, how it affects auditing process is this. Remember, we have looked at the auditing process from stage 1 to the last. We started from planning. We went on to gathering of audit evidence. We went on to looking at evaluation and reporting. The reporting will be taken by the other facilitator, right? Now, that is the process. So what now happens is once you activate these technologies, what they do is that they impact the audit process. Okay? In what way? So let's look at it. The first one is on the audit engagement planning. That is the planning stage. With the use of IT now, right? The identification or the selection of the team, the audit team, time allocation, assigning responsibilities to staff, establishing materiality threshold has now been reduced, okay, because of the what? Introduction of these IT technologies. All of these have assisted in doing what? Making it what? Easy, okay, to conduct what? Audit. So in that way, when there's something disrupt, does not necessarily mean that it brings bad energy or bad reputation to something. No. When they say something disrupt, as regards this area that we are talking about, is that it changes the narrative of how we used to do things before now. Okay? So the IT, all of these have gone away to changing how things are done. The second aspect of auditing that is affected by the new technologies is the audit risk assessment. Now, there are audit software that can help to do what? That can help to conduct audit risk assessment once given the what? The parameters, both qualitative and quantitative parameters. Give the figures, then give the notes. It's going to determine whether there is a risk or there are no risk. It's going to tell you. Why? Because we have those audit software that can carry out this task. Another way that the new IT has impacted the audit engagement is evaluating the internal control system. Okay? Now, with the use of computer controls, general controls, application controls, you can check, you can evaluate, you can assess the client internal control system. How? Now, take a look at general control. General control is talking about those controls around the world, around the computer system, to ensure there is what? There is data security and data integrity. So you have a laptop now, and it said that you must input password because there are sensitive information contained on your laptop or your desktop, and you did not put the password there. What have you done as part of internal control? You have breached the internal control system because somebody will have access to that information and they are going to use it against the organization. Do you understand? Then we have the next one talking about audit substantive testing. So the use of IT now, it has made the test of these transactions to be what? Very, very seamless. Why? Because with the use of audit software, you can calculate your audit sampling With the use of all this software, you can determine your materiality threshold. With the use of all this software, you can use it to obtain as much evidence as possible. Here in this class, we have looked at CATs, computer-assisted audit techniques, that are what? These are computer programs that are installed on a client system to do what? To enable the generation of what? Audit evidence from the client computer system. So the CAT, the likes of the ACL, audit software, okay, test data, these two, they are used to do what? To extract information from the client system that ordinarily it would have taken days or weeks to obtain. But with your knowledge of IT, you understand SQL very well. You understand how to use the audit software very well. You can deploy the software and your knowledge of SQL, you'll be able to extract information from the client system online, real time. As a matter of fact, the audit software has also assisted in the area of what? Generating audit reports. Because now we have audit software that have different templates. That have what? Different templates of what? Of audit reports that you have embarked upon. Whether you're auditing a bank, you're auditing FMCG, you're auditing oil and gas, there are templates for the audit report. So doing audits these days now is what? Is fun. Why will it be fun? If we have embraced IT. If we are yet to embrace IT, it will be very, very challenging. These days now, you don't even need to memorize most of those auditing standards and the accounting standard again once you are an external auditor. Why? Because the system that they give to you, they have already pre-installed the auditing software there. And they are updated from time to time. So any information you need about accounting standard, auditing standard, is at your beck and call. It's at your fingertips. So in a way, IT has helped to revolutionize the way we conduct our audits globally. Globally, not only in Nigeria, globally. And the effect cannot be overemphasized. Okay? So I hope that is clear, sir. Can I continue?
Yes.
Can I continue? Okay, fine. So go to the next area, types of information system. Now, there are different types of information system that exist in an organization. We have the first one called the Management Information System, which is called the MIS. Okay? Now, what this does is that it helps to what? Create record files, store them, retrieve them, and archive them as much as possible. It helps to create record and files, store them, make it easier for what? For retrieval, and also archive them. So what do I mean by archive? So when they are no longer in use, when they have passed the stage where they're supposed to use it, maybe they're supposed to use it at the end of for a whole year, and it's now going to 2 years, they will take them out of that space and store them in the archives for future references or use. We call it Management Information System. Okay? Because it helps management and it deals with information that relates to management making what? Decisions. They have the second one called what? Transaction Processing System. These typically represent application software designed to process daily business transactions. Example of these are the accounting systems that we have in our offices, which we use to do our daily bank position, treasury balances, daily treasury positions. Okay, use it to process transactions. Okay, we call it the transaction processing system. And we have the next one, which we call the executive information system. Now, as the name implies, the executive is always busy. They can't afford to waste time. They cannot afford to sit down on a report and read it for hours. So what do? They have a system that has been put in place in form of a tool that helps to summarize their reports in a way that it is easier for them to comprehend and for them to make quick decisions. So it presents something like a dashboard to them. Dashboard. How do I explain dashboard? If you look at your car, you can see where you have the steering. You ignite your engine, you see all the light comes up. That's the dashboard. So if there's anything wrong with your car, you are very comfortable with your dashboard. You can easily detect it by looking at the dashboard. So that is the kind of scenario that the executive information system presents to the executive management. It's mainly for them. So they don't need to see all the nitty-gritty of everything. What they just need to have an overview of what is happening. Are we good? Are we not good? They can see it at a glance. Now we talk about executive information system. Okay. Then we have the last one, which we call what? The decision assistant system, or we call it decision support system. What this does is that it aids the management in what? In decision-making process. It aids the management in decision-making processes. Okay? So what that does is that when there is a bottleneck, or where there are bottlenecks in making decisions, and it becomes very, very difficult and challenging, and they couldn't wrap their brain around a problem or a solution, providing a solution. This tool assists in making them to arrive at what? Decisions that can improve or that can increase and improve the decision making process in an organization. So those are the type of information system: management information system, transaction processing system, executive information system, and the last one, decision support system. Okay, are we together? Can we proceed? So let's go to the next one: information technology risk. What are some of the risks that all those good things that IT has brought? What are those challenges that they bring alongside it? Let's look at them. One of the risks of IT is what we call hackers. Who are hackers? Hackers are people who allegedly break into your computer system for various reasons, which could include extortion of money or just for pride. Like what happened some weeks back, which was allegedly that GTBank, that they couldn't access their online platform for some seconds or so. So people said that it was hacker. It was the hackers that hacked into their system. So that because they did not pay their host, their web host, that they couldn't web host server. That's why all those things happen. All of these, if it's not properly checked, can be as a result of what? Hacking. Another risk of IT is insider fraud. Okay? And this happens where a member of staff uses the employer's computer system a member of staff uses the employer computer system to alter sensitive data for unlawful benefits. Okay? You remember what happened in First Bank some months back? That was reported that one of their top management staff resigned after 2 months. After a month that he resigned, they discovered that the huge millions of naira went missing. That was what led to the dismissal of over 120 management staff at First Bank last 2 months. Okay, that's what we call insider fraud. They were cliques, they were cabals in the system. Okay, they manipulate the system for their own benefit. Then we have another risk, IT risk, that is called password theft. And password theft is when the a staff that has been exited or that was wrongfully exited or that fee disgruntled decides to pay back the organization in his own coin as a result of what is unsatisfactory nature of what of exit. So you feel a staff now left was dismissed for unruly behavior. And let's say the person is an IT staff. And say that I know what to do. You said you decide to lay me off. I know what to do. The guy now went to the system. He has the password, changed some of the configurations of the system, and made it very difficult for their customers to access their site. Okay, it's called what? Password theft. Then there's another we call the denial of service attack, DDoS. Okay. Now, all this does is that it prevents the company's authorized users from having access to the website or other IT resources. Okay, that was what happened some months back, where all the airlines that operate on, I think they operate on AWS, Amazon Web Service or so, that they could not buy tickets, they could not sell tickets, they could not book, they could not reserve seats for a short time. It's called what? Denial of service attack. Okay? Then you have hardware and software failures. The system can crash at any time. That is hardware and software. Software could be when you have blue screen of death. You open your system, and all you can see is this light blue, and they hold some of these different letterings there. It's called blue screen of death. When it happens, you need to shut down. You need to start your system. Okay, you hold on to the start key and press it down. The system will off, and when it reboots again, it will be corrected. But as at that time, it's called software failure. Hardware failure could be that the power pack is no longer charging. Okay, or the fan on the laptop has stopped working. All of these are what we know as what? Hardware and software failures. Okay. Another one that it could also have a simple internet downtime. Okay. That makes it difficult for people to raise their orders. Then we have malware threats. Malwares, we have software. Software are good, while malware are bad softwares. Okay. They are bad. We call them malicious. So malicious software designed to disrupt computer operations. Okay. What they do is that they infest computer system in such a way that there will be disruption in the processes within the organization. We call it malware threat. Okay. They are what we call virus threat. Virus threat represent computer program which executed can copy itself and spread from one computer to another, often disrupting computer operations. We call it virus threat. So if there's a virus on a flash, or if there's a virus on the what do we call this thing? External hard disk, and you plug it onto the server, it will replicate itself, it will run automatically, and it's going to affect the entire computer resource on the system. We call it virus threat. Then we also have what we call spam and phishing attack. Now, phishing attack and spam, what do they mean? Say these are unsolicited email that seeks to fool unsuspecting people into revealing personal details or buying fraudulent goods online. We call it spams, and phishing attacks. So somebody now, you receive an anonymous email saying that somebody is the widow to one rich billionaire that died, and he has looked through and he saw that somebody, in a way, he got your email address and decides to share the loot with you, share the money with you. And he said that this is my email address and send so and so information. You'll granted access, you have access to the millions from my deceased husband or deceased wife. If it's someone that is very greedy and that love money, like in that way, the person will fall victim of such a ploy by those people that carry out spams and phishing attacks. Okay, it's a social engineering kind of IT risk. They look at you. For instance, if you know, sometimes you go to Facebook, you see sometimes you go to Facebook, what you see there, you see a man that is using a lady as his profile picture. You use it to lure the man into doing what? Into defrauding the man. Or you receive an anonymous email, a call from your phone saying that they are your bank agents or they are your bank your bank customer service. That somebody has tried to, there is an update, give us your PIN that can help you to update your account. Some of those things, all of these things are called phishing and spam attack. Okay. Then another one that can lead to computer risk is what we call natural disaster. So if there is an earthquake, or there is tsunami, or there is a volcanic eruption, or there is heavy flooding, all of these could affect computer. Okay. And next, we have what we call human error. Everybody is prone to what? Making mistakes. Okay. So where an employee accidentally or unintentionally deletes a vital information on a system or fail to follow security procedures properly, we call it what? Human error. All right. We call it human error. So all of these are the different computer technology risk or information technology risk that we have looked at. Any question? Any comment? Any observation? Okay, we continue. So one of the ways we have looked at those IT risks. So the ways to manage this risk is what we want to start discussing now. How do we manage this risk? Because you cannot eliminate them. Remember, in your CSME, risk cannot be eliminated, but can be what? Mitigated or managed. So how do you manage this risk? Number one, identify the risk. If you're able to identify a problem, the problem is half solved. Once you have identified the risk, assess the risk, evaluate it, weigh it. Number three, mitigate the risk. Try to reduce it to what? To the barest minimum. Number four, develop response plans. Develop what? Response plans. That is, once you are trying to mitigate the risk, you have to draw out how you want to ensure you mitigate against this risk. You have to explore all scenarios, from best to the worst scenarios. Okay? Then after that, now you have drawn up your response plan, you now review it. You review your risk management procedure to see that the response plan you have put up covers for every aspect of the what? Of the organization or of the business. Okay? So those are the things that you need to do. Okay? So how can you protect your information system? What other things can you do to protect your information system? Number one, you need to regularly update your system. Some of us, when you see system update on our phone or on our system, we ignore them. What that implies is that you are exposing your system or your phone to what? To attack, cyber attack. Number two, always train your staff on IT policies and procedure regularly. Let them know the IT policy. Every organization should have IT policies. Okay. Number three, IT policies can mean that we don't allow the use of what? Flash drive. Okay. Then you need to also, one of the other ways you can also protect information system is to secure computers, servers, and wireless network with both physical and logical access controls. Physical control means you put a lock and key, you put it in place under restriction. Okay. The logical access control. Logical access means you are going to use password or you use what we call what do you call this thing? Public key or private key. It's called encryption. Yes, thank you. It's called encryption. All those are what? Are logical access control. Okay? You don't allow access. For instance, if you have a server now, it's not enough for you to just put padlock and key there. You might need to put a biometrics there. And that biometrics will mean that if you don't have an ID, if you don't have some numbers, or you don't have your fingerprint, you cannot gain access. So if you have not been enrolled, you don't have access to that site. Okay? You can also, another way to protect your information is to use what? Antivirus or anti-malware, such as your firewall, okay? And your IDS and your IPS. IDS and IPS. What's IDS? Intrusion Prevention Solutions. And we have Intrusion Detection Solutions. Okay? Then, another way you can also do that is periodic and regular backup of data to off-site or remote storage location. When you back up, don't store it in one place. Change location. Okay? Implement password protection policy. What that means is that that's why you see most organizations, they have what we call password protection policy. After they have used your password for like 60 days or 30 days, they will prompt you to change it. So some people have used all their names, all their relations name. They've used everything that they know they have. What is now led that they can't compare anything. They go now do. They now decide to write the new password in a piece of work because they cannot comprehend it, they cannot memorize it. They will now write it there and keep it inside their drawer, even though it's not good, but that's the only thing they can do because they cannot commit to memory. Okay? Then constant review of the legal and operating environment for online business. And also take cyber insurance. I think it's called cyber insurance policy. Okay? You take insurance for it to cover for those risks. It's called cyber insurance. And I think it's cyber insurance. Okay? So that's all for this. We are going to stop here for today. Next class, we are going to continue from application system audit process. Application system audit process, okay? But before that time, the other facilitator will come and take us through another aspect of the substantive procedure for current assets, substantive procedure for trade payables. The person will treat that. The person will also treat the topic on reporting. Okay, audit reporting and audit finalization and reporting. When it's done with all of that, I will now come in to wrap up with this. Okay, and we'll also start to look at some questions. Okay, in the meantime, because the exam is also fast approaching. Anybody have any question, any comment, any observation? Question, comment, observation? Are we good? Okay. If there are no questions, comment, or observation, we call it a wrap here for tonight. So next Friday, hopefully, by God's grace, the other facilitator will come on board and take us through the remaining topics while I will come back and wrap up on this chapter. All right. So like I said, if you have any question, comment, observation, please feel free to always drop it, okay, on the WhatsApp platform, or you have my number and chat me up or you call me on any area. Don't wait till the day exam day before you now say, oh, let me call this person now. You have luxury of time now and try to utilize it. Another thing you also need to do, please practice as many questions as possible. It's to your own good. It's not enough for you to just listen to this lecture time to time, from time to time. But if you don't practice question, you will not know how to apply this knowledge to the questions in the exam, and that is the key. That is why we are here. Okay, please practice as many questions as possible. Okay, if there are no questions, if there are no comments, if there are no observations, and like I said, the class is brought to is hereby adjourned. Okay, till next week.
Sir, please, when will this video be posted, please?
And like I said, at the end of the class, like tomorrow, just put it on that platform, requesting for this video. I think they posted one video in the couple in this week, right? Do you see it on the platform?
On the
Have you
platform
checked the
or on
platform?
YouTube?
Yes,
Yes, I
check
saw the
it.
link.
So what you do at the end of the class today, when you might not do it tonight, early tomorrow morning, just request for the video. Just put it there. The person that will do it will get back to you. That is an assurance.
All right,
Right?
sir.
All right. Have a good night, Joseph.
Yeah, good night.
Right.
Good night. Bye.